Welcome to another edition of On My Mind. There's just so much in the news nowadays. I thought I'll make a quick video to kind of discuss some of the implications of things that are going on and what they might mean for us in our industry. I am traveling, as you can see, I'm in another hotel room. I think we spend a lot of time in hotel rooms, but here we are. So the first thing I think is quite interesting is the scurry of deals, the number of deals that have been signed for US LNG project equity in the last week or so. We start off seeing the Stone Peak deal that they bought into the Woodside, now the ex-Tellurian project in Louisiana. And Stone Peak's an interesting company. They've been in the LNG space a long time. If I recall correctly, they were one of the first investors into the Magnolia LNG plant. They know the industry really well, and I think it's a very positive sign. Now, they do drive a hard bargain. I've dealt with them in the past, kind of briefly, but not detailed at all. But I do know that they do drive a hard bargain, so I'm sure that they're going to get any of the upside in that project. But I think Woodside was pretty desperate to find a partner. So, but it's good. I think it's good. It just shows there is still appetite from private equity and financial firms to invest into US LNG. The second deal, I think it was the EIG, which is EIG Mid Ocean deal, and they invested into the Lake Charles project. I think this is very interesting. EIG Mid Ocean, the Mid Ocean is the entity that they've created, has done a lot of really amazing things in the very short time they've been around. They've bought into, I think it was a Tokyo Gas assets in Australia, picked up a bunch of producing assets that they were buying in. They're negotiating to buy into Peru. I think they closed that deal as well, and now this deal. So that's a lot of new, fresh money coming in. I know they're funded by Aramco, among others, but just to have an entity solely focused on LNG and actually making a lot of deals is great. So they bought into Lake Charles, and that's a shot in the arm for Lake Charles because that project, I think, was a bit floundering. So it's probably good for everybody, but especially good for Energy Transfer. That really is not an LNG company. I think they can probably learn a lot from EIG. If you remember, EIG were the original investors into the Freeport LNG project as well. So definitely know their stuff, and I think it's very positive. Last deal, which I thought was quite interesting, was the Mubadala purchase into Kimmeridge, and Kimmeridge is now the owner operator of the Commonwealth LNG project. So this is, three fairly interesting equity deals into projects that have not reached FID. Both, Lake Charles is not at FID, even though it's a brownfield project. Commonwealth was on the brink of FID. There seems to be some issues, and I think Kimmeridge has been working hard at that. And we see, and of course, the Tellurian project was kind of FID. They call it FID, but I'm not sure how much work was actually done. And then they stopped, and they ran out of money. And the story goes on. Woodside bought into it about a year ago for about $1 billion. So as far as I'm concerned, it's kind of pre-FID. So we see equity money coming into pre-FID projects. All three of those projects had their FERC permit. All three of them, I think, are fairly solid projects. Lake Charles is the one that I think has floundered for the longest time. It is an import terminal. It was the first import terminal in the US in 1970s. It was built. It's hardly been used as an import terminal. It is pretty far up the Caucasus Channel. The site's, I think, a little bit congested, but they do have the tanks and the facilities and the marine facilities. So it is just a matter of time before that project came into place. All the gas pipelines were there as well. So I was quite heartened by the fact that there are new equity plays happening into pre-FID American LNG projects. Of course, I'm still raising money for my project, Gulfstream LNG, and talking to a lot of investors, which brings up to the next point. Why are some of the investors sitting on the fence that I'm talking to? There's a lot of uncertainty. Obviously, in the last couple of months of the Trump administration, we've had a lot of good news for the industry. Good news such as permits are finally happening, export restrictions are being reduced. I think the FERC process is going to get more efficient. I think some of the distractions that we've had and the anti-gas bias that we had in the last administration will go away. That's all very positive. Of course, there's two sides to every coin. The stock market uncertainty obviously is not great for potential equity players because they've seen their value of their assets drop. But I think more importantly, it's what do these tariffs really mean? I'm not going to, there's a lot of new stuff about tariffs. As far as I can see, it boils down to something as simple as if there is really import tariffs for steel and steel products coming into the US, and I heard the number of 25% was bandied about. If that actually happens, no project is going to go ahead. No project in America, no project around the world probably can handle a 25% increase in steel cost. After all, the drivers of an LNG project are steel, interest rates. The drivers of a capex of an LNG project are steel, interest rates, and construction costs. That's basically it. Those are the three main drivers. And if we see steel price go up by 25% through an artificially imposed tariff, that's going to kill a lot of projects, or at least delay projects till construction starts. And it forms a bit of a quandary because a lot of these projects want to get to FID. They are looking for to get to FID. They need to have project finance. To get project finance, the bankers are going to demand a lump sum turnkey contract to make sure that they are not on the hook if there's a cost overrun. And if you are an EPC contractor, an engineering construction company contractor that typically offers lump sum turnkey, how do you account for a 25% potential tariff? If you say, listen, if there is a tariff, I'll pass it on to the customer, well, then it's not really a lump sum anymore, and the banks will then have to have a facility that's 25% greater to take into account if there is a tariff. And I'm not sure most projects can handle the economics of a 25% increase in their cost. So that's not good. Retaliatory tariffs are a big problem as well. China was rapidly becoming the largest importer of LNG in the world. It was the market that we all went to at the year of COVID in 2022. China signed more deals than probably any other entity for US LNG as well. And now, as far as I've heard, China has not imported any LNG into China from the US for many, many months. That's not good. We cannot have now potentially the world's largest exporter of LNG and the world's largest importer of LNG not trade with each other directly. What I've been told is the Chinese companies that had long-term deals with American exporters are now reselling those cargoes on the open market. That's fine for the short haul, but are they going to be stepping up and buying the new offtake deals? I think it's going to be difficult. We need the Chinese, in the Chinese entity to work with the consent of the government. If the government doesn't get consent for them to work in the US, that's going to be a problem. The Chinese were never equity investors in the US, so that's not a big problem. But they were large off takers, and I think that is something that we all should be concerned with. Now we see China imposing an import tariff of all the US stuff of 100 and something percent to match the American tariff. That gets crazy. You can't have the price of LNG if you're importing LNG directly from the States. And if it is going to be cut under the import tariff, I don't know if it is, you can't have the price double and still be economic with any other LNG around the world. When it was a 25% tariff, I said, American gas is probably 25% cheaper than other gas. It can probably still be economic. At 100% tariff or 140% tariff, that's not going to happen. So what is worrying to me is the politicization of LNG. None of us want to see LNG become a political weapon. On the positive, the administration has been pro LNG and really pushing for it. But if they continue to make it political, we're going to see the buyers get very nervous, and investors are also going to get nervous. I think it's amusing to watch what's going on with the Alaska LNG project. I used to work in Alaska. I spent 3 years of my life on the Alaska LNG project in the 90s. There's a lot of push for it to happen. I think there's a lot of challenges. I'm not here to say it's going to happen or not going to happen, but the arm twisting comes from a political angle. And my strong feeling is that if you're forcing to have a partnership, a forced marriage, so to speak, by arm twisting the partner to become married to you, the partner being a Japanese or a Korean or Taiwanese entity, then it's probably not a very strong partnership or relationship, and it's probably not going to last that long. It's like a forced marriage, probably not going to last that long. But hey, good luck to them. Good luck to the people trying. It'll be great for the state of Alaska. The state of Alaska needs something to happen. The oil pipeline is hardly being, is down the capacity. The pipeline when I was there was moving 2 million barrels a day. It's moving less than 500,000 barrels a day now. And the state of Alaska needs gas for its own people in the south. I would have said the Yamal solution, which is an icebreaker and modular solution on the Arctic slope, is the way to go for Alaska LNG, but that's not going to give any Alaska gas to the state of Alaska. So that may not work very efficiently unless they allow exports from the north of Alaska to the south of Alaska. But that's a Jones Act. There's a lot more complications there. So in a nutshell, we have a lot of news flow. I hope that we can just keep our focus about us. American LNG is going to be important. If we make it too political, we're going to give the market to the hands of our competitors. And who are the competitors? Obviously, Russia is still looking to sell LNG, Arctic 2, even though it's kind of quote unquote sanctioned. I'm sure they're signing deals or making deals in the gray market if you're not in the open market. The Qataris are still out there trying to sell a lot of their expansion volumes. They have a lot of volume to sell. If American LNG becomes too political, we may be pushing the people to the Qatari buyers. We've seen oil prices dropped in the last few days. That's obviously good for a buyer of an oil linked contract, because then the Qatari gas becomes cheap as well, because Qatari gas is oil linked. So lots of contradictory things going on, but I think on a very positive, to end on a positive note, it's fantastic to see new money entering the pre-FID LNG space in the US. And I'll be amiss if I didn't mention the new Aramco offtake deal with Next Decade. So we see the Middle Eastern players, which is basically Aramco and Mubadala, Aramco also via EIG, getting very excited about US LNG. And I look forward to investments from other parts of the world as well. Hope this is interesting, and let's continue the conversation. Thanks.